If you had a trading system that could help you catch moves like this, where you're able to identify the very turning point of a specific high where the market heads lower and able to catch a massive move down, as well as identifying a turning point where you're able to buy at this range high point with a stop beneath this low and catch the full expansion move higher, would this type of system and strategy help your trading? Now, these are the type of trades that have helped me get results just like this, where I've gotten multiple payouts from multiple different firms consistently, made multiple hundreds of thousands of dollars from the markets. Now, in this video, I'm going to share with you guys the day trading strategy that has helped me make hundreds of thousands of dollars in these markets, as well as the same strategy that has created results like this. As you guys can see, Cruz here was able to finally pass his evaluation with Alpha Capital using the EBP and another strategy that I'll talk in a different video with the golden hour. Nav was able to have his $1,000 payout incoming from GoFunded Trader, as well as Shiba, who just a year ago, he was completely lost and frustrated with his trading. And now he was able to secure a 3% withdrawal using the EBP framework and the strategy that I'm about to teach you guys in this video. And side note, many people are always going to be lost and frustrated with trading when they are trading concepts and not a proven winning system. Now, the goal of me showing you guys this is for two reasons. Number one, I want to show you guys that I've actually made money using these strategies. And number two, I want to show you guys that this is replicable and multiple people can also achieve results using the strategy. And those were just a few of the many testimonials that I have in my academy. Now, first, we're going to talk about and give terms to this exact system and strategy that I've been using. If you guys have been in the channel for any length of time, you're already very familiar with this, but we're going to do this for people who are brand new. Now, this right here is something that I use that will make a massive difference in your trading. This right here is a bullish engulfing candle. This is defined for me as price sweeping the prior bar as low, and we have a closure above the opening price. It does not need to engulf the full candle, as we'll see in the bearish example. Here, I will consider this a bearish engulfing. Notice how price sweeps the prior bars high, and we have a closure below the opening price. This, to me, is a bearish engulfing. Now, it's very important that we set definitions for these terms, because we're going to use this in the strategy moving forward. Now, in the first video of the series, I talked about the EBP method number 1. This actually did very well, where 9 days ago, over almost 70,000 views. So if you guys are new to the channel, I'm going to put the link in the description for this one, and you could check it out later. But using the EBP method 1, we will primarily focus on the monthly, weekly, and daily time frame. But today, we're going to talk about the EBP method 2, where this includes different time frames like the 4-hour and the 1-hour. Now, I'm going to use the examples that I referenced inside of my public Telegram. The link is in the description below, where we had a gold example on a 4-hour bar that was forming, and we had this AUD USD on the 4-hour time frame. The 4-hour time frame is going to be the main time frame that we use in these examples. I'm going to show you guys in depth the exact strategy. Now, let's go ahead, let's head into TradingView, and we're going to break this system down. But first, leave a like and subscribe if you haven't to make sure you become a profitable trader. All right, guys, so now we're going to get into the examples. Now, just for understanding and just for us to kind of like add some narrative and context to everything, right? We know what the engulfing bar play is. It's a very simple setup that we're essentially looking for, right? We already defined everything. Now, with method 2, what we're primarily going to focus on is the 4-hour time frame. So I want us to understand that this is pretty much going to be based off the 4-hour. Now, you can use it on all different time frames, but I'm just going to use it for 4-hour for an intraday just to make it a lot easier. When it comes to the 1-hour and the lower time frames, it does require a little bit more context, and it does require a little bit more skill, and there's a lot more variables to it. But I want to keep things simple, so I'm going to go ahead and just break down how we can use this on a 4-hour time frame and how you can use this for day trades. Now, we do know that the market is typically going to have one of two profiles. We're going to have some sort of continuation, and we're going to have some sort of reversal. Now, we do have consolidations, but within consolidations, we typically focus on reversal profiles. I'll make a separate video on continuations, and I'll make a complete separate video on reversals, so that way we can have that definition and understanding of when to look for certain market profiles. Now, with the engulfing bar play, what I typically want to see is in a continuation model, right? Let's just say the market made a new low. We swept maybe some sort of liquidity, and then the market had an impulse push up. Using basic structure, if the market comes into some sort of retracement, and we know that this swing high is our potential higher high, I know that the market is going to potentially form a higher low. Meaning, this point in here, this potential higher low, is going to form at some sort of PD array, and then we could look for higher prices. Now, this is the exact moment that if I see something like a 4-hour engulfing, I'm going to be very interested, because this is going to be my quote-unquote confirmation that we could look to head long. Inversely, if we're looking for reversals, and let's just say the market is a key higher time frame level, and we see some sort of rejection, and this could be a liquidity pool, this could be a higher time frame order block, whatever the case may be, on the reversal side, I'm going to typically look for this bar to form some sort of 4-hour engulfing. That way, I know that with the proper context, I can look for lower prices, especially if there's some sort of inefficiency in here. So if there's some sort of fair value gap on the run up, if there's maybe resting liquidity that's being rested, like let's say there's equal lows as well, like maybe trendline liquidity, this is going to give me the framework to identify a high probability reversal. And I know this seems like an oversimplification, but trust me, guys, trading is not as difficult as many people make it seem. The problem is within the SMC niche, and from what I've seen, like a lot of trading educators, they overcomplicate things. Continuations, reversals. Use the EBP method within these contexts, and you'll be able to really identify high probability opportunities. Now, let's actually go ahead, use this, and incorporate it with the EBP to create a full trading system. Here, we have the example on gold that I talked about within the public telegram. Now, what is the first thing that we see? Number one, we have a swing low that forms, and we have this impulse push up. We have multiple imbalances, and we have this order block in here. So we know that inside of this overall bullish swing, we have an order block that's resting in there. And let's actually make this a solid color. So I'm going to make this, let's just actually just change the setting on this. And then we make this a solid color. Beautiful. So we have this order block, we have these imbalance points, we have another imbalance as well in here. So pretty much from all the way down to this swing low to swing high, we have an impulse. This impulse leg is showing bullish. I mean, gold has been pretty bullish overall. Now, when the market comes into this area, we understand two things. If the market is going to form a potential higher low in here, we know this is going to be an area where the market more than likely is going to do it at, right? It's the basic concept of discount and premium. When we draw the swing low to swing high, what do we have? Prices inside of a discount. Inside of a discounted market, we can typically anticipate that if we're going to head higher and we're going to continue this overall trend, we're looking for some sort of confirmation. Now, again, this is a 4-hour time frame. As we play this forward, what do we have here? It's our signature EBP. And this is what I love to see. It's funny, we actually have one EBP here. They actually set the price higher. And as you guys really get acclimated with this, you'll be able to see these all over the charts. Now, once we have that closure above the opening price, remember, we don't have to close above this high. If we close above the opening price, that is valid for me. Some people require, based off of my mentor, Tom Dante, he requires to close like above the bar. For me, I just needed to close above the opening price. Now I'm just going to remove this. Once this forms, and I'm going to actually, let me just put on the indicator so just to make sure it's on the 4-hour time frame. Beautiful. Okay. Perfect. So as we play it forward, right now, the engulfing bar essentially forms, and I'm going to show this off right here. And let me actually just remove the history so we don't have, we just have this current bar. Now, the next candle is the same concept I talked about in method 1. When the candle opens, I want to see a retracement back to 25 up to the 50% mark. And a lot of people have asked me, how do you manage the trade according to the system, right? Where do you go ahead and place your stop losses? Now, in the next video, I'm going to keep a video 3 because I just want to talk about the overall concept. I'm going to talk about stop placement and how to manage your trades using the EBP. So in this video, I'm just going to focus primarily on actually utilizing it and identifying it. So you have the market come down. We got a little bit of an entry around the 25%, and then we have this higher high. So this is going to be our higher point potential objective. Now, me personally, I like to, like, let's just say if I see inside of this overall swing, I want to identify any PD arrays, right? Any reference points. So just in case, like we have this area in here, we have a fair value gap, and this is the last up move before this impulse leg lower. So as we play it forward, the market overall plays out. Beautiful. Comes into that 50% of that range. And then we kind of have the market go a little bit inside of a consolidation. And yeah, well, now we're kind of just fizzling out in here. And again, we have a little bit of a push up. So this is exactly why I like to use the EBP in terms of that, because as we identify this EBP bullish candle, this sets the stage for us to potentially have a higher low and then trend continuation. Remember this, when the market has some sort of trend continuation reversal, we're typically going to sweep liquidity first as that's fuel for the market, and then we're going to head higher. So now let's look at the Aussie example, because we're going to use the inverse of it, which we're going to use the reversal profile. All right, guys, so now we have Aussie USD. So I want people to really take a look at this and look how we formed this bearish engulfing. It's the same exact thing that we just talked about, but now in reverse. Typically, reversals are going to happen above previous week's high in this example, and that's exactly what we have here. We had this prior week where the market had this swing high point. Going into the new week, the market actually took that out, and then what did we form? We have a bearish engulfing sweep, which was detected by the indicator. This gives us a very solid foundation, and it gives us the potential for an entry down in here. Again, look at how the market comes up to the 25%. So what these boxes are is essentially this range divider. So if you take the fib high down to that fib low, and I already have it saved as like my range divider, what typically happens is you're going to see that the market overall comes back into around that 25 to 50% mark. Okay, let's hope that this switches. Perfect. So that's the 25%. So the market comes up in the next candle. Same thing we talked about method 1. It comes up, hits that 25%. Ideally, sometimes it goes up to 50%. You don't really want to see it up to 75%, but this is more than enough. We have that open. The market hits that area, and we drop lower. Now, here's a sneak peek. If you guys are like super... if you really just want to know about like the stop placement, you could typically put the stop loss. It should not go above the high. The whole point of this high is supposed to be an intermediate term high where there's a potential turning point, especially when we have proper context. We took out prior week's high, and if let's just say the weekly time frame is also bearish, so let's just say the weekly is bearish, or maybe the daily is also bearish, we can then look for this as our quote-unquote confirmation to go short, start targeting liquidity to the downside. So we have swing lows. If there's any imbalance points that are down here as well, these are areas that we can look to mark out. Now, what I want you guys to do, as we're getting ready for video 3, make sure to go on your charts, identify multiple engulfing bars, and see which ones played out, which ones didn't. What were the common characteristics for the ones that did play out, and what were the common characteristics of the ones that did not? If you guys want to see more examples of this, make sure to join the public Telegram. Hope you guys enjoyed this video. And in video 3, we're going to be talking about how we're going to manage our trades using the EBP method.